Hello again, welcome back to the channel. It's DIGIFOX. Today we're going to be talking about 3 DeFi coins that are safe plays that can make you quite a bit of money. Now, none of this financial advice. We are not financial advisors. Everything said here is 100% our opinion. So first things first, let's get into the news. Coming to you from CNBC, we see that Coinbase CEO says the crypto exchange is preparing to go to court with the US SEC. That's right. It looks like Coinbase is teaming up with Ripple to go ahead and battle the SEC. Now, if you go ahead and subscribe and like, you will go ahead and also get the bell going for you, right? Because we're going to talk about some news articles that are coming out very, very rapidly, and we're going to discuss those tomorrow. But as we can see here in this article right in front of us, we see that Mr. Armstrong, the CEO, also said Coinbase would consider options of investing more abroad, including relocating from the US to elsewhere if the regulatory situation does not improve. Now, honestly, in our opinion, right? This is not fact. In our opinion, we believe this is going to happen anyway. Why? Because we see that the Fed now, as indicated in our past videos, is going to launch here very, very soon, within the next couple of months. And when that happens, there is literally going to be no place that is going to be safe for cryptocurrencies, because they will literally shut down any on-ramps that you have. Now, how they go about creating a whole populace in a country to deviate away from the current system and into a CBDC, well, that's yet to be determined. We have our theories, but we're just going to keep them at theories, and maybe we'll share, maybe we won't. But we scroll further down here and we see here he is. Mr. Armstrong is probably preparing to open up an office potentially in the UK. Why the UK? Because the UK already has rules and regulations on cryptocurrencies. They are more friendly, and they definitely want to get as much market share of the cryptocurrency space as much as possible. And not to mention that if you are familiar with finance history, you will remember that the American banks some time ago decided to go ahead and travel to Great Britain to open up their banks, and pretty much was really friendly over there for the banks, and that gave them the chance to lend on astronomical levels, right? So is it going to be the same thing with cryptocurrencies? Well, we think so in our opinion, but that's yet to be seen. We have to wait potentially for a couple of more months. We see here that investors in Coinbase, which is listed in the US and whose stock is up around 90% this year, will be watching how the SEC issue plays out. Barclays, which is a financial institution, said in a note this month that regulatory overhang on Coinbase's stock increased meaningful when the SEC issued the Wales notice. We think the most onerous outcome could be that if various crypto assets are deemed securities, Coinbase would therefore need to register as a security exchange in order to keep offering trading in those assets. And that is going to be very problematic for those in the United States of America, as if they want to get crypto rich and become crypto millionaires. Which leads us to the next topic. Our 3 picks of DeFi coins, which could be potentially securities, right? But this is not financial advice. We are not financial advisors. Everything said here is 100% our opinion. And let's get on to the 3 tokens. And these are going to be safe plays because they are OGs. They are the originators that launched in, 2019, 2020. And they saw the DeFi boom of 2020 summer. First up is Comp, trading currently at $45 with a total supply coinage we're talking about here of 10 million coins. The market cap is only a modest $311 million with a total value locked of $1.4 billion. Now that ratio right there, when you have a market cap of 300 million and then you have a total lock value of 1.4 billion, that's actually good on the plus side. And now you're probably wondering, well, what's Comp and what can we look for in price action? Because essentially you're here to know the charting, right? We trade charts and not farts, right? And we see its all-time high was roughly around $800 and is currently $40. Now, if you were to buy and assume that it is going to go to $800, which we'll verify here in a second, that is essentially going to be a 20x from its current prices. So even if it does dip down below the current prices, because it's a possibility if you are following the SPY and as well as Bitcoin, it is a possibility. But even still, you just wait until it gets to all-time highs, you've 20x your money. That is an astronomical amount. So what does that mean? It means if you invest $100, you will get $2,000. That's right, $100 to $2,000. When? On time frame? Well, probably within the next 2 years, maybe. Who knows? It all depends on regulations. It all depends on many factors. But there's not to say that it will not happen. It may actually go above that. It is a possibility, because if it does go to all-time highs, it very well may form a rounded bottom, a very multi-year one, which then you're looking at roughly around maybe $1,100 for per comp. And you have to remember, there's only 10,000 of these, right? And it's forming something similar to what BTC did roughly around the 2014 era, 2013, 2014 era. So keep that in mind. And so what is comp? Well, if we go to Kraken, which is a US exchange, I'm sorry, someone's blowing up my telephone. Well, first off, let's wait for the Kraken. Here we go. Beginner's Guide. What is comp? We see here it is a DeFi, which is short for decentralized finance, right? Compound is a software running on Ethereum. It's an ERC20 that aims to incentivize and a distributive network of computers to operate a traditional money market. Right? Put simply, Compound allows users to deposit cryptocurrency into lending pools for access by borrowers. Lenders then earn interest on the assets they deposit. So you are effectively being your own bank. You have comp tokens, you have other assets, cryptocurrencies, right? Whatever they may be, and you put them on their network, their protocol, at which point people come and they borrow your tokens to do whatever it is they want to do, right? In the meantime, you are gaining interest. So you are a miniature small bank. And that is what it is. And they pay you out in comp tokens. And so we see here in 2018, they raised $8.2 million for funding from venture capitalists Anderson Horowitz and Bain Capital Ventures. Now, they ran an additional $25 million in 2019, and so they've been around for quite a while during the bear market, mind you, of yesteryear, right? And we see here that as of 2020, they have 500 million in assets that were locked. That is significantly higher, as we saw, because there is a 1.4 billion, I believe it was, total value locked. So they've essentially almost tripled since this was written by Kraken. So here is the comp website, just to get you familiar with it. This is going to be compound.finance. And we see here that here's an app that you click on to connect your wallet. It would benefit you to have MetaMask, as that makes everything so easier. And here are some of the tokens that they have markets for, which is DAI, USDC, USDT, Compound on Ethereum. And I believe that's it, if I'm not mistaken. Let's see here. They have market. Is this the markets that we're in? Let's see here. Let's click on the markets. And let's see here. And so here we are actually in the app without our wallet connected. And these are the borrowing markets we see here. You could put up your Chainlink. You could put up your Uniswap. You could put up your Comp, your Wrap Bitcoin, and Ether. Why is it Wrap Bitcoin and not the actual Bitcoin? Well, in order to be on an Ethereum protocol, you need to wrap a Bitcoin and turn it into what essentially is an ERC20, which is backed by a full Bitcoin or whatever Bitcoin you have wrapped at that time. And we see here the total supply that is available for every single coin here. And we see here liquidation penalties. I'm trying to see if it gives you like the, what's it called? The percentage of APY if you contribute to Compound. And I don't see it. But roughly you're looking around, oh, here we go. You earn 3%, 4%. So that's not really all that great, to be honest with you. And if you borrow, you owe this much in interest. So here's the thing with this, right? Currently, as we speak, you could get a, through your bank, a 5% yield, more or less, on a, I believe, treasury, if I'm not mistaken. And your money goes in there. Now, they are a 3-month one. So you can get 5% on 3 months. Now, if you are in cryptocurrency, you're not too fond of fiat money, which hence why you're on this channel, right? Go ahead and just put it in here, and you're getting essentially the same thing, maybe a little bit under. So where is comp going to go? Because essentially, if you're not interested in the protocol, you're definitely going to be interested in owning some tokens, and we'll tell you why. It is going to pretty much repeat what this did back over here in, what is it, 2020, 2021. Now, to get to all-time highs, let's go ahead and show you what we're going on about. To get back to all-time highs, if you were to buy at this level, and just to get back to all-time highs, that is essentially a 1,897% gain. That is 20x, ladies and gentlemen. 20x. That is fire. Now, what and how will it do this? Well, it'll probably just travel around here and come up like this, do a little of this, come up. Oh, look at that, forming a rounded bottom, come back, retest, and then off to the races, and then break it. Now, if it does do this, right, which it is a probability, it will do it. Now, don't give us, don't say, hey, yo, Fox, what the heck, when? We know when moon, right? So what you need to look at is we are going to get a Fibonacci retracement. If I can find it on here, oh, there it is. It's a Fibonacci retracement. And where is the tippy tip conservative area where it can go? And right now we can tell you it is going to be roughly around this price right here, ladies and gentlemen. Per comp token, next bull run, next moon bull run of DeFi, comp will see $1,300. And that is conservative. Now, it is possible it could come all the way up here to 2,000, but we highly recommend that on the way up to 1,000, you start taking profits heavily. And then you just keep some for little moon baggage, right? Because at the end of the day, you have to remember, there's not that many comp tokens. There's only 10 million. That's less Bitcoin, right? That's less Bitcoin. That's less a lot of tokens. So when you look at that, it is possible that we can see $2,000 per comp token. But at the end of the day, you want to lock in your gains because essentially you don't have the actual gains, you don't have the money unless you actually sell, and that's the whole trick behind it, right? So that's our first one. Next is Aave, which is a lending platform. Yes, the same, almost the same, if not the same as Compound. They give you the same interest, more or less. I believe they offer more tokens, if not maybe the same, because they're I believe they did a switch up, if I'm not mistaken. But we see here that the market cap is $1.1 billion. We see that the total value locked is $4 billion. So this one is definitely more utilized than Comp, as we can see here. Now, going back to Aave, oops, got a little freeze action there. Now, we see here that max supply is 16 million tokens. Again, low supply. So this is definitely something that's being used quite heavily, almost about 3 times as much as Compound, and also has a little bit more tokens. But the fact that it is being utilized speaks volumes. And how high did it get earlier on in 2021? Let's see here. Let's wait for CoinGecko to load up because it's taking some time. It got up to $600. And so even though it did get less, that probably has something to do with the fact of the tokenomics, right? Because there's more tokens than Compound. And so we go to the app of Aave, and we see here, once it loads up, just give you a little eyesight of it. We go to the markets, and let's see what they have available, right? You can stake your Aave. You can stake other things as well. You also get governance. So remember, holding tokens gives you governance, meaning that you are essentially part of the board of directors in some form or fashion, right? And you get to vote on certain things. Now, we see here that the markets on Aave, and the reason that they are heavily more valuable, or sorry, more value locked in than Compound, is the fact that they have more tokens that you can actually get. And they even provide you a supply APY, which is located right here, right? So if you were to, why did I just do that? Oh my God. There we go. So as you can see here, if you put up your stablecoin of DAI, you get 2% Frax, you get 1% Gemini dollar, 2%. So it's very low, right? And this is guaranteed. There's no ifs, ands, or buts about it. Now you can put up Curve DAO, but you get less than 1%. So it's not really, you might as well just hold on to your tokens. If you have synthetics, which is that's going to be key. We'll talk about them later on. You get 1.6%. So you do have more assets, and some assets actually have to get frozen. So Convex token gets frozen, DeFi Pulse gets frozen, Engine. So you have a lot of tokens here. And the thing is when you come here, you can take out what's called a loan, right? And when you take out this loan, you can buy whatever you want for it. You know, you convert it to whatever tokens, and then you just buy whatever it is you want to buy. You could go ahead and use off ramps and on ramps to get yourself a car, right? That's one thing you could do. Now, what you have to remember is after a certain amount of time, if you do not pay back this loan in full, the tokens that you put up are gone, right? So we highly recommend, if you're going to do this to take out a loan, keep that in mind. If you're going to do this to get interest on your tokens rather than just have them sit there in the wallet, go ahead and do that, but keep in mind, there is some assets that do get locked, like frozen assets here, right? And so you look at, let's go to staking, right? Now you can stake, and let's see what they offer on staking. So if you have Aave tokens, you get 6% for staking. Simple as that. Also ABPT. Now I'm not too familiar with ABPT, but you get 12% for that. So that's another thing you can do. So that is something key to remember. If you have Aave tokens and you are going to jump into our play here, wink, wink, you definitely will want to consider staking because, you know, it's free money, right? Make your money work for you. Now, again, number 2, let's go. Here we are on Aave. This is going to be the Aave tether chart on KuCoin, not Binance. What you have to realize is Aave some time ago were actually called Lend, and then they're called Lend Aave or something of that nature. But they've gone through a different tokenized names, right, and redistributions of their tokens, because at one point they actually, I think, were a billion or multi-billion-dollar coin in max supply, and then for every new Aave that they were going to release, you had to have X amount of old Lend Aave, right? And so now we're left with 16 million being full supply. Now, and so that's why the charts are kind of wonky on this, because it actually did, Aave was around 2020, which is around this area. But the issue is, like we stated before, was the fact that it was called something else and it had a different supply of tokens. So where do we see Aave going? Well, that could be quite interesting, to be honest with you. It's not going to be as volatile as, it's going to be less volatile as Compound, theoretically, when you compare it to both. But at the end of the day, they both are part of the DeFi sector. So when all of DeFi goes, essentially, right? So let's see. What we predict here is there is going to be around the bottom, not as prominent as Compound, but it is going to probably do something like this and go all the way up. And what you have to look at now is essentially this region right here, because this is going to be your, not only your resistance, but once you get past the resistance, it's going to flip into support. And that is quite a significant amount. I mean, you're going back to this whole jagged area from the 2021 of February all the way to the winter of 2021. And so pulling out our fibs, right? And the reason we like fibs on this channel is because it's simple and it very much gives you a conservative outlook, because any percentage gains is essentially a win, right? And if you're looking for a place to sell and you really don't know, well, then just do the fibs. It gives you roughly an idea. And so we see here, if we pull this down here, now we could do a retracement, but more or less, our estimates dictate that this is going to be an $864 Aave per token, mind you. And it is a possibility, depending on how much and how hard we run, that we could hit a $1,300 Aave. Now, there is a lot of use case on it. The market cap is bigger than Compound, right? But there are things with Compound that that they do not have that Aave do, right? And so when we look at the gains, how much gainage can we get from this, right? So let's look at price range. Now, if you were to buy right now and wait to that area, you're looking at roughly a 10x, right? So Compound, it's going to be a little bit high risk because not a lot of people are using it. So what does that mean? Well, it could actually go into nowhere, right? Or maybe something with a lawsuit happens and they just decide to go after it and shut down the protocol, right? Everything is a possibility in the negative for Compound, right? But at the same time, again, Compound, high risk, high reward. You're looking at 1,800, 1,900%, as opposed to just the 1,000%. Frankly, that's kind of silly just saying that, but at the end of the day, you know, that's what we're here about, right? We're here for the gains, the massive gains, right? And so, you know, 10x compared to a 20x. Yeah, you know, like what you want to do. Now, Aave is going to be one of the safer plays, to be honest with you. Some people in the stock market have to wait a decade for this. You just have to wait maybe a couple of years, if that, maybe, right? So that's what we think, to be honest with you. Aave is going to hit around $800, a little bit over $800. When it gets roughly around $800, that's going to be a eye-watering level, because it's just a nice, decent number, you know? So everyone's going to start taking profit around $800. And we recommend you do the same thing too. Don't wait for the $64 extra dollars. Just take out like $7.99 when it gets to $800, $801, somewhere around there, or $7.90 for all that matter, you know? Just go ahead and take profits and leave the rest for the future, because Aave is a protocol that will be around according to the article, maybe not in the Americas, but definitely in Europe and Asia. All right, so on to our third and last coin. Again, not financial advice. Sticking with the DeFi theme is going to be synthetics, SNX. Come on, CoinGecko, what's happened to you? Let's go. Get with the program. There you go. So synthetics has roughly $900 million in market cap. They have 316 million tokens, right? And a let's see here, and a fully dilution of the same as the market cap, right? Now the total lock value is going to be roughly around 500 million. Now let's see, its all-time highs, I believe it was $20 if I'm not mistaken. Yeah, $25. Sorry, excuse us. And that was roughly around February 2021. Now, why do we think synthetics is going to go? Well, synthetics is actually a protocol that is going to be massive in the blockchain cryptocurrency space. And the fact that it's an ERC20 is very, very handsome. And not to mention, look at all the different wraps that they have for it, right? It is available on Ethereum, Near, Huobi, Polygon, Phantom, Harmony, Avalanche, Optimism, and Energy. So it is not going anywhere. They're integrated with so many blockchains, so many layer 1s and some layer 2s that it's almost impossible for this to go anywhere. I think, in the opinion on this channel, I believe that it was smashed down as low as possible so that it could be accumulated by some massive whales. And here is why, right? Let's go to Kraken. And so you're wondering, what is synthetics? Well, synthetics is almost like what the name entails, right? It's an alteration, right? A fake alteration, right? And so we see here, coming to you from Kraken yet again, what is synthetics? It is a software that allows users to mint new crypto assets that mimic both real world assets like the dollar and crypto assets like Bitcoin. One of an emerging number of decentralized cryptocurrencies, synthetics enables this service through code alone without the need for a financial intermediary. Rather, synthetics is simply a collection of smart contracts, running on Ethereum. So, how can this be played? Well, we believe that if you're able to connect information, right, and wrap up and create a token in some form or fashion with real-world assets such as real estate, bonds, even stocks. And so you have something that's like a currency in any country, right? And you can wrap it up on synthetics and trade it. And then when you get that synthetics, for example, you could use let's say the British pound, wrap it up in synthetics, take it with you in your ledger to America, and exchange it for a synthetic US dollar, and then use a bridge to take out the money via an ATM or something of that nature. So it's very, very lucrative. It represents a one-for-one asset. So if you have a stock that's wrapped up in synthetics, that stock is representative of something that you actually own via the stock market. It's just been taken out of trading because you own it via synthetics. And this is something that major institutions will be using, right? And so right now, here is the webpage. Look, the derivatives liquidity protocol. Derivatives. What are stocks? Derivatives. There you go. How big is the derivatives market? Quadrillions. Yes, quadrillions of USD are in derivatives, right? And if you're wondering what a derivative is, essentially you take your $1, your £1 to a bank. They are able to lend out that $1 to 10 different people by creating 10 extra dollars. I know, shameful, but that's what they do. You can also stake it, and you also have governance by holding this. Now, imagine owning a lot of these tokens and you are the voter for where this protocol goes. That is going to be very important in the very, very near future. So, where can it go? Why should you own it and be part of the board of directors of Synthetic Protocol? We are on the Synthetics Tether, which is going to represent $1, and it is going to be on Binance. So we see here that we already started doing some charting here. Let's delete this, right? And this is also forming what is called the DeFi rounded bottom, right? Again, here is the infamous rounded bottom going like this. It's probably going to go like this. It looks almost, that's actually pretty good. Let's see. Yeah, so yeah, look at that. Look at that. 2024. Look at that. That's pretty much where it's going to go, right? We see here that it's 2024. That's pretty much within the cycle, is it not? And so we already did a fib retracement for you, or a Fibonacci, and we see that it is going to go to $42. It is currently $2.91. So what is the gain on that? Well, let's have a look-see, shall we? The gain of that is not working. Why is it not working? Oh, I did the wrong thing. Oh, lovely. Oh, lovely. Let's see here. Price range. There we go. It is going to be, there we go, 2,418% gains if you were to buy it today. 25x if you were to buy synthetics today. So let's just bring up a calculator, shall we? If you were to drop, let's say, so we have the calculator. Let's see, if you had 500 USD or whatever the equivalent of that is, depending on where you're watching from this beautiful world, let's put in $500, right? You're going to times it by this percentage gain. We're just going to round up and say 2,500 percentage, right? This is cross multiplication of fractions, right? And so you equal that. Now you divide it by 100, and then you get, there you go. If you were to put $500 today in synthetics, the next bull run is going to produce roughly over $12,000. That is impeccable money. And so if you were to literally put in anything more, it would just gain, because this is going to be the highest risk of all of them, right? Because here's what's going to happen. And this is the reality of it, ladies and gentlemen. Look, let's just get rid of this. Let's just get rid of this. The reality is, it's very volatile, and you're going to have 1 week to do it. That's it. 1 week, maybe 2 if you're lucky. So with that said, happy days, happy trading, and good luck to every single one of you.